Morning traders, it's the 5th of January. We are Signal Centre Talking Bull. I'm Joe and Steve will be joining me shortly, but we'll kick off in his absence. We'll get into the latest headlines, what's been moving markets over the past 24 hours. If anybody's got any requests of charts that they want us to look at, please feel free to post them up in the chats and we'll do our best to cover them. We'll cover what we feel is interesting to us today, and we'll also talk about the trade ideas that we've published over the last 24 hours. So let's get involved in the headlines then, shall we, to start things off. And we can see that there was a subdued US manufacturing number that came out yesterday. The US ISM manufacturing index declined to 48.4 for December from a previous number of 49. And this was marginally below the consensus forecast. The production and new orders components were both in contraction territory for the month, while there was a small net increase in employment. When you look at these numbers, 50 really is the number that is key here. Anything below 50 suggests we're in contraction phase. If we're above 50, that suggests we're in expansion phase. So for the time being, we remain in that contraction period. And we saw, contrary to that, some strong jobs numbers. The JOLTS data recorded a small decline in job openings to 10.46 million for November from a revised number of 10.51 in the previous month. But this was above the expectations of 10 million, which suggested that the labour market was still firm. It was all about the Fed numbers yesterday as well. That came out at 7 p.m. UK time. According to the minutes from the December's Fed meeting, members welcomed the recent inflation data, which suggests that it was declining, but warned that it would take substantially more evidence of progress to be confident of a sustained downward path. There are also further uncompromising warnings that the interest rates were unlikely to be cut in 2023. There was, however, agreement that slowing rate hikes would allow the bank to assess inflation and employment developments. There was limited dollar support. The dollar did gain some support from the job openings data and the Fed minutes, although overall support was limited, especially with the subdued ISM data. The yen was the main casualty during the day, with other currencies being quite resilient. So we've seen some strength in Japanese yen of late, but that was reversed quite aggressively yesterday. And we'll take a look at some of those charts in a moment. In terms of what's happening in the UK, the mortgage approvals slumped. The UK mortgage approvals declined to 46,100 for November from a revised number of 57,900 in the previous month, well below the consensus forecast of 55,000 and the lowest reading since June 2020. No major surprises, I don't think, given that the interest rates are obviously on an upward curve, it would seem at the moment. So it is likely that we will start to see the housing market cool a little bit. We've got ADP jobs numbers today. That's the main focus for the data for the day ahead. And this will be released at, I think, 1:15 today, if I'm not mistaken. Yes, 1:15. And the data will have a significant impact on the sentiment towards the Federal Reserve policies, and also a pretty good indication ahead of the big number tomorrow, which is the non-farm payroll number. Okay, that's it for the latest headlines. Welcome, Steve. Are you in a position to show us some charts?
I sure am, mate. Can you hear me okay?
We can, loud and clear.
Excellent. Yeah, let's take a look at, let's start off with Bitcoin and just see how that's getting on. Bitcoin's been very, very quiet by its standards. Over the past couple of months, really, this is a weekly chart. We can see just the sideways price action that we've had after the tremendous fall from the heady heights of almost 69,000. I've just drawn a Fibonacci on here, really. We've got this downward trending resistance that we had from the previous structure. But that doesn't really give us any clues. Obviously, this previous all-time high, which was way back in December 2017, we're below that now and have been for some time, and we seem to be struggling to get above it. In fact, if we go down to the daily chart, we can get a much better idea of really the sort of the rallies that are getting sold into when we're posting these lower highs. Now we've got moving averages on here, 5,500 and 200-day moving average. We're below all of them. We managed to sort of like pop above the 55 in October, but slam back down by the 100, capping all the gains. So this doesn't look like it's changing anytime soon. Are we sort of forming a bottom? I don't think so yet. If we look back, really, we're looking at 12,000 as the next support, and I fully expect that to be tested before we even think about any sort of rally. So we're holding around about 16,800 at the moment, but yeah, looks pretty sick overall, and over the next few weeks and months, I'm sure we're going to see that move lower. Let's take a look at gold. I think I've better clean this chart up. It's looking a little bit messy. Let's get the well, I'll leave the pivotal level that we've talked about in there. Take this channel out. Let's get rid of the leave the head and shoulders formation in there, the inverse head and shoulders formation, this double bottom formation, which we've hit the measured move target on, and we've superseded it. We've got up to 1865 yesterday and rejected from there, trading at 1846, so a short interim top. We've got resistance all the way up to 1878. That's from the swing high from the 13th of June. But the major resistance for me would be 1900 to 1915, which was a pivotal level in the past. We can see it all the way back in 21 and in 22, both in March 21 and 22. So looking quite strong overall on gold, but a bit of a pullback yesterday, a bit of a stall in proceedings. Obviously a dollar-based move, and we can take a look at the dollar in a second. But yeah, overall looking pretty positive, as is the inverse head and shoulders formation in silver. Hasn't quite achieved its target, 24.92, stalled in front of there, 24.55, and rejected lower. It's now testing a little bit support at 23.42, but the major support coming in down at between 21.5 and 22.30. So that's where we'd expect to find further support. But overall, still looking like quite a decent low, quite a decent bottom formation in place. Copper, we've got a crossover on the copper on the moving averages, 55 with 100, looking to form a golden cross. But again, we've rejected the 200-day moving average. This was my gun to head yesterday, which failed. And we've pushed lower and we've taken out the support that was at 372, but we've managed to hold around there now. So it's stabilized somewhat. This 55-day moving average may be hoping to do a job here on supporting copper at the moment. The double bottom formation has a higher measure move target, but the main form of resistance we expect to see above is between $4 and $4.50. Oops, let's take a look at oil. Oil looking pretty sickly, really. Wednesday's oil inventories out yesterday, and we've seen after the bearish outside candle on Tuesday, follow through to the downside yesterday, and we're looking to target the $70.50 support in WTI crude oil. That's quite an aggressive move to the downside after stalling in front of the 55-day moving average. So we remain negative on crude oil, and Brent crude oil, the same sort of picture, same sort of structure, bearish outside candle followed by some decent follow through to the downside. Support coming in there around $76. So that's a decent sort of like $5 premium to WTI crude oil. And what I haven't got on here was natural gas. Let me try and bring that up. I want to try and get it from as we're trying to build this up, let me jump across to my other chart and have a quick. Yeah, Nat Gas managed to hold on after the sell-off. We've got this gap on the charts over the weekend of the new year between around about 435 and 413. Positive day yesterday, ended up closing higher than it opened and closed the day before. Not really much going on today. So if we do get a break to the upside 413, we'd look to fill that gap. Otherwise, the support in the charts is coming in at around about 355 to 360. That's the next target. The measured move for the inverse head and shoulder, for the head and shoulders formation is, wait for it, all the way down at 135. Can't see that really, Joe.
Be nice though, wouldn't it?
It would be nice. It would mean that maybe we don't need natural gas anymore if it gets down there. I mean, so this is the main support coming in at 350. That's where I expect to see sort of buying coming in.
Okay, is that all the commodities, Steve?
All the commodities covered. Yep.
Lovely, thank you very much. Right, let's take a look at some FX markets then, shall we? And let's start off with the dollar index, as we often do, and have a look at how that is shaping up. So, been talking about this wedge formation for the last couple of trading sessions. We do have this head and shoulders top, which indicates that the prices are likely to remain bearish over the medium term, which, you know, comes as some relief because obviously the dollar's had a magnificent rise over pretty much the last 2 years, going back to 2021. So likely that we're going to get some sort of correction here to the downside, but in the very short term we do have a wedge formation here, which we can see prices have broken out of. So we saw this impulsive candle on the first trading day of the year on the 3rd. Yesterday we saw a bit of bearish price action, but certainly off of the worst levels of the session. We saw a pullback to test the reverse side of the break of the wedge, and we remain above it. So we actually have gaps lower in price today, but recovering some of that already. We are slightly higher on the session, and for me, it looks as though we may start to head higher in the very short term. Just really my own kind of personal take on it. I think we are going to see a reasonable correction on the dollar, maybe to around 106, potentially as high as 107.58, which would test these previous levels of support, which should now act as resistance. So I am quite bullish actually in the short term on the US dollar, providing that this support at 103.45 continues to hold. Overall, I am bearish, but you know, I think that there's going to be a reasonable correction higher, which we can look to set into over the course of the coming weeks and months. Let's take a look at Euro US dollar, and this is kind of supporting my view as well. We saw prices trade within this big bearish channel for a period of time. Then we saw this bottoming price action before a correction higher towards the 38.2% fib level. In the very short term, it looks as though we're forming some sort of topping action. We can see here there's a horizontal support at 105.75. We closed below it on the 3rd. We had a decent move higher yesterday and closed back above it, but I'm not entirely convinced. I think selling towards 106.54 is my preferred strategy here. Nice risk reward on that as well if you have a stop loss above those highs at 107.36. Looking to target a pullback into this kind of region here, which is around 103.50. So that is my take there. Let's take a look at cable. We can see there is maybe some topping formations here taking place. We've got horizontal resistance at 119.92. We saw a close below it on the 3rd. We punched back above it yesterday, posted an engulfing candle actually, so that may go some way to invalidating it, but overall I do feel that gains are likely to be limited in the short term, and we could see a pullback to this kind of region here, which is at 116.36. If we do see a move above these levels here at 124.20, these previous highs, then that would invalidate my bearish view on that. But of course, we need to see what's happening with the dollar index as well. Let's take a look at some of the yen currencies, because that's really what was interesting yesterday. We can see a really powerful move higher in Aussie yen, so strength in the Aussie dollar, weakness in the Japanese yen, but it's just rallied into the neckline of this head and shoulders top pattern that we've got on the daily charts. There are some pretty firm resistance levels around here between kind of 90.83 to 91.08. So I would be looking potentially to sell into these kind of regions with a fairly tight stop, expecting prices to maybe continue lower. The measured move of the head and shoulders target is down here at 83.07. Now, as we've seen on many occasions with the Japanese yen, when the BOJ have intervened, the moves haven't tended to stick, and we may be getting further evidence of that here. We saw a big move to the downside with yen strength, but then prices have been pretty choppy since. But the impulsiveness of this candle that we saw yesterday will be a cause for concern for the Japanese yen bulls. So we need to see if indeed this resistance level is going to work on this occasion. So look at euro yen, another head and shoulders top here. This was an upward slanting one, so not the cleanest of head and shoulders by any means. We can see the rally into the neckline here, did attract fresh selling interest. We can see here yesterday a really impulsive candle yet again, having found support at this 137.36 level. So it'd be interesting to see if we do get any selling action into around 141.57, maybe even as high as these levels here, 143.86. I still think up to these regions, my preference would be to sell. Only if we can invalidate the right shoulder would my bearish view change on that for the time being. So potentially a decent amount of upside there before we do actually get a continuation lower towards these measured move targets at around 133.07. Let's take a look at sterling yen, see what that was doing. So this was trading in a range. We saw a breakdown from that. We saw this actually achieve the measured move target at 157.00 before then rallying quite sharply. So again, probably up to the neckline of this kind of range that we saw at 163.06. I'd potentially be interested in looking for some sells. And let's take a look at Japanese yen and the US dollar. So dollar yen, we can see this trading in a pretty neat bearish channel for the time being. We saw some reaction around these support levels at 130.50 to 131.25. Decent reaction higher. We do have some resistance here to contend with. That's at 134.50. So if we get a retest of this level, if we then start to see some candles start to form like reversal candles engulfings, evening stars, bearish aramis, etc., then that may indicate that we are going to remain within this channel and prices may continue to head lower. It looks as though we're getting some sort of topping formation here, which may take a while to play out. Okay, I think that's it for currencies, unless there's any requests. Gary's looking at gold. We have already covered that. Maybe we can come back to that, Steve.
Yeah, sure. Sterling yen. Oh, sorry, Swiss yen. Swiss yen.
Swiss yen. Okay, interesting. Let's take a look at Swiss yen, shall we? Okay, so again, looks to be some sort of topping formation going on here. We can see that here by this kind of rounded formation that we've got. It's not a head and shoulders because we've got a left shoulder that is higher than the head in this instance. So we can just look at this as some sort of top formation, maybe some sort of triangle potentially that we formed. We've broken down through that on that impulsive move lower on the 20th of December. We've seen a retest of that. We did overshoot it a little bit, but prices seem to be being capped by these resistance levels here around 145.22. So I think any kind of reversal into between 143.80 to 145.22 would represent an opportunity to sell. We've got support down here at 137.80. So for me, this looks to be topping out potentially even larger formation taking place here. This being maybe the left shoulder, this being a head, and maybe some sort of right formation, right shoulder formation taking place into these levels here. And then ultimately looking for lower prices. Sorry for the crude drawings, but I think my bias there is for lower prices, and I'd potentially be looking to sell into this region here at 143.52. Let's take a look at this from a risk reward perspective. So selling into that kind of region there depends on how aggressive you want to be with this. But a pullback to that support at 137.81 would mean we need to go a bit tighter on the stop, something around maybe there. If we wanted to take a longer term view, then maybe we could put a stop up there and target something much lower down over the more medium term. So my bias is for lower levels on that.
All right, lovely. I'll just cover off.
Sorry, one
gold.
more, Steve. Aussie dollar. We've had a request from Ali on YouTube
Okay,
there.
yeah.
So let's take a quick look at that. So my thoughts on this. So we had an inverse head and shoulders, played out really nicely, hit the measured move target. Yesterday, we saw some strong price action, trying to test these previous highs that we posted back in December, but ultimately coming up short and still closed below the break of this wedge pattern that we had. So keeps touching the underside of this. And it seems to be attracting selling interest. So again, I think my bias is probably for lower levels here, looking for the Aussie dollar to move lower. But again, don't forget my thoughts on the US dollar is that maybe we are going to see a bit of strength there. So that would play out quite nicely here, looking for lower prices for Aussie weakness and for dollar strength. So I think I'm looking for lower prices there, providing these levels at 68.93 continue to prevent prices from moving higher. I think my bias is for lower prices here as well.
Okay, thanks, Joe. Let's we can. There's one request for PayPal. I just thought I'd take a quick look at that. This is the daily chart on PayPal. We're seeing some decent gaps up on PayPal over the last few sessions, running into a little bit of resistance with the 55-day moving average, but I wouldn't expect that to stop that. This seems to be a very accelerated move. We've taken out the resistance, but then held and closed around there at 77.64. So further upside, looks like a really nice bottom formation has formed there. Support would come in the shape of this 71.37. Any pullbacks are there, would expect to be decent buying opportunities. If we look at the 4-hour chart, we can see we've still got a little bit of work to do before we're into a upward trend on the 4-hour chart. So still, yeah, a little bit of work, a little bit over the top, sorry, overhead resistance would be coming in around about the $84 to $86.50. Hope that helps. Take a quick look at gold, like we said we would. Yeah, gold has stalled, and dollar strength may be the reason for this, and reversing slightly off the heights yesterday. 1865 was the high. A little bit of a pullback. Maybe we're going to get. We've had quite an exponential move over the last week or so. So maybe we're going to just get that nice little pullback before buyers come back in again. So I'll be mildly negative on an intraday basis on gold, but looking to buy dips really because of the lovely bottom it's formed. That about covers that off. Let's dive into the indices. We're taking a look at indices. Seem to be stalling ever so slightly. We've had a lower high posted on the FTSE in the last 3 days after we smashed into the overhead resistance here. We've got quite a wide range on this resistance. As we can see, lower highs formed in 4. We're still lower highs, although we've taken out early December high only just. And yeah, just the spike up doesn't seem to be maintained. So maybe we are stalling after this quite decent move we've had in the FTSE since the 20th of December. On the DAX, we've had 3 really positive days, and we're stalling now today in front of resistance. So that might be an early or a decent opportunity to take a look at what's going on in the shorter term timeframes. Hanging man candles, doji candles, shooting star, all looks like it could be forming a bit of a top. This might be a decent gun to head trade idea, I was thinking just prior to just covering that off the other assets. The US 30, the Dow, that also seems to have just stalled fractionally after Tuesday, which is our first real day back. We managed a positive day yesterday, but it wasn't able to push higher than Tuesday's gains, and today we're off to a bit of a rocky start. We've had a golden cross on the indices, so that would make me a little bit more concerned about shorting anything around here. The overall picture seems to have formed a bottom, so we have to sort of like maintain that understanding of the markets when you're approaching it. But if you manage your money well and have stops in place, there's no reason why we can't go against it. Tuesday's price action on Nasdaq wasn't so good, although yesterday inspired a little bit, but it still didn't sort of like go any way to sort of like getting close to the highs. 11,100, that's the resistance level, and on the day we haven't really done anything today, but slightly negative. 10,890 we're trading, so on the back foot on the indices, which represent the tech stocks. S&P 500 also struggling. We've had a crossover on the 55 and 100-day moving average, but yesterday's bullish candle hasn't really taken out Tuesday's highs either. So this inspirational start to the year may have already ended quite quickly. That's about it for the indices, Joe.
Okay, cool. Don't think there's any other requests. Please feel free to keep getting involved, guys. We'll do our best to cover as many markets as we can. So let's move on to the gun to the head challenge. So this is where Steve and I pick trade ideas live on the video. As if we had a gun to our head, what would we trade right now? Each of the ideas that we come up with must have stops and targets. They must have risk reward ratios in excess of 2 to 1. and they will expire at 9 p.m. UK time, or when the stops or the targets are hit. So they're only running for a few hours a day. And we can take a look at how our trade ideas went yesterday. You can see all of them on our profile, which is signal_center on TradingView. So trade ideas yesterday, Steve was looking to buy copper. There was a reason. He was looking at a double bottom formation in the short term, and you can see that illustrated there on the hourly chart. If we click the play button, we can see how it fared, and sadly not very well. It
should get locked up for that, mate.
Yeah, well, it was a valid setup, I think, looking to trade that, but there was no follow-through action there, but that can happen. You've been on a pretty good run of late, so I think we can forgive you for that one. I was looking at the ending wedge formation on dollar Swiss. So you can't see it here. This is just the hourly chart, but on the daily, there was quite a nice wedge formation that I was looking to take advantage of. I was looking to buy that small pullback into these levels of support here, which did do a reasonable job of providing support, but the move higher was pretty muted. It was just a bit of a grind throughout the session, but it was on the side at the close at 9 p.m. when we shut it off for a win of 0.79R. So we'll take that. I was looking for ultimately 2.69, but 0.79 will do. And we can move on again to fresh ideas today. Is there anything you've got up your sleeve today, Steve? Anything you fancy?
Nothing up the sleeves, mate. As you can see, wearing a t-shirt or a polo shirt. So,
Is that
but
because you
what
can
we have
afford the
got,
gas prices now?
just about. Yeah, it hasn't filtered through yet. What we have got though, Joe, we've got our Oanda live account. Now,
dangerous.
yeah. Now we want this to sort of like work well. The problem with this is that you can't always sort of get on the size you want or whatever. £2,000 account, but we're going to give it a go. I think we should just go for it, Joe. And you tell me your trade idea. I'll place it on here. I'll put my trade idea on here, and then we live by the sword, die by the sword. So what do you reckon? Sorry?
Let's do it.
Oh,
what do I reckon about what trade to do?
Yeah.
Oh,
Tell me
right. I
what
know.
trade. Have you got one?
No, I haven't. I'm still searching for one. So this is...
Okay, so I'm going to go for one. I'm going to go for the DAX. And on the daily chart, we had a really decent uplift, but the 4-hour chart looks to be sort of like stalling here. So I'm quite sort of like happy to fade into this move. The stop can be like above the highs of, well, midnight it is. So let's get the order on here. I'll display the order as so. Stop is at 14.5, 28.5. You know I like to round things up, and I want to go for a 3-to-1 risk reward. Now, what we've got to do, we can't automatically close these apps, so we've got to set our alarms for 9 o'clock tonight, Joe, and close these positions out manually. So that's where it could all go horribly wrong. Let me just create this order on here. So I want to risk 1%, and market order, I want to risk 1%. What's the price now? Yeah, it's trading around there. I want the stop to be, so my stop is at 14,230. No, that's wrong. Stop loss is at 14,000. Oh, I want to sell, don't I? 14,528. So I want to risk 1%. So that's, is this working right, Joe? Don't know if it is. 14,248. It's nearly. So I have to, the price is changing. Maybe that's why it's causing a problem. How about that? Does that work? We can't do the fractions. So this is risking 0.86%. So shall I do it here, Joe? I don't know if
Yeah,
this
that's
is
that's
working.
that's what's going to happen. It's not always going to be a bang on risking 1%, but that is the facts of life of trading with real money. It's you can't always get the exact position size you want on, depending on the size of your account. So, are you on?
All right, I'm on. I'm on. It's
Okay.
done. Ah!
Okay, let's have a look at my idea then. So I'm going to go with Euro Sterling today, and this is the daily setup. So we can see prices have been trapped within a bit of a range for the last few months, going back to kind of October time. We did have this big push up. This was the budget disaster in the UK, which created that spike. But since then, prices have been pretty trapped here. If we take a look at the price action over the last few days, we can see that there's been a number of kind of doji style candles or indecision candles as we've approached this resistance at 88.67. And we can see that on the 3rd of January, we saw this pullback in price, which indicated maybe that we're going to start to see some sort of correction. We can see yesterday prices were lower, but today we have pushed to the upside into a resistance at 88.33. If we take a look at the intraday charts, this is the hourly, looks to me as though maybe we are forming some sort of short-term top here. We've rallied by 61.8% from this swing move here. So I want to sell into this here, Steve, at current price of 88.37. I want to have a stop loss at 88.64. And I'm targeting a move down to 87.81. So that's a risk reward ratio of 2.18.
Right, give me the levels again, Joe.
Okay, so selling at market, stop
Yeah.
loss at 88.64.
Stop loss at 88.
64.
Yep.
And a target at 87.81.
Yeah, 2.58 to 1.
Yeah, it
Is
might
that
be.
about right?
Prices have moved a bit against me, so that looks about right. Yeah. So it's an even better entry there.
So there you go. I've put it on, and if you
We're
see at the
live.
bottom, we're live. Live
Arrow on
trade
the
ideas.
chart.
These are the two trade ideas that we've just shown on the video, the stream, and 9 o'clock tonight we're going to close them out if they haven't hit the stop or target. So
Okay.
there we go. All done.
Two trades
Happy
on.
days.
Lovely. Let's see how they go. So what we can do with that, Steve, actually is we can log into the platform that it's linked to, and we can actually employ an expert advisor to close those trade ideas out automatically at 9 o'clock. So we'll have a look at doing that in a moment.
I thought you were an
So we
expert
don't have
advisor,
to do it.
Joe.
Yeah, I am. But we can get one that's an automated version of me. So we'll
Right.
get that on later. Okay, fantastic. A couple of other requests coming in, Steve. We have already looked at natural gas, Rice. So if you want to check that out, please scroll back to the beginning of the video. You'll see Steve's coverage there.
Yeah.
And
Apple.
Apple, we've had a request for as well. If you want to take
Oh,
a quick look at that, that
oh,
doesn't look healthy at all.
doesn't look
It's a bit
great
of a
at all.
poison apple there.
Definitely, and for me, the sort of like one of the key levels for me would be this like neckline that we've got between these two tops. So like a really decent double top. The tops don't have to be at the same level. It's very close indeed. Breaking below here is negative indeed. Let's take it back. Get some fibs on here. So the first one I would look for is to the move from the pandemic, actually, after the sell-off in the pandemic, all the way up. And let's get some fibs to see where we should find some support for Apple. Now, the first level I'd look at is 118, only because of the March 21 price action as well. That's a 50% fib retracement. 61.8 also looks pretty healthy as a target level, maybe a level to start to think about accumulating Apple again. 103.33. That's when we had the spike up to the all-time high in August 20, and the retracement down to 103. So yeah, looks overall bearish. I'd be looking to sell into rallies. This looks like quite a definitive top formation, and you can even, you know what I'm like, you can even find a head and shoulders in there somewhere, although the right shoulder is pretty high, so it doesn't really grab me. It's more of this double top formation. Here we go. And here we go. So double top formation Let's we could even give you like a projected move for this. Close your eyes if you're holding. The measured move is 75.14. That's not great, is it?
Ouch.
So yeah, Apple quite a big stock, and yeah, overall we're mildly bearish. And someone asking, do you journal your trade? This is the first time we're going live. For the last 3 years, we have been doing this gun to head as a bit of fun. This is the first time we're going live. So everything will be in this account. You can see the account number here. This is the live account we opened yesterday. So yeah,
so we do journal our trades. I mean, if you think about how we go about it, we do these videos every day. We discuss why we're coming up with these trade ideas. So we're sort of, you know, discussing the rationale behind all of the ideas that we come up with, and they're all jotted down. And we've got all the stats, you know, going back to 2019, was it, when we first started this?
Yeah,
I think it was, wasn't
probably
it?
about there. Yeah.
Yeah.
I mean, do you want to share the Excel spreadsheet, Joe? Just have a quick share of it, just to sort of show what we've done before. Good question to ask, because there's so many people I see online now who are just saying, show
So
me
this
the
is
trades.
the list of all the trades that we've ever done. So Steve and I mainly, but we have had other analysts join us in the past. We've had Ian, Jamie, and Taff, and we started off on a hypothetical account balance of 1,000, and we've been risking 1% per trade ever since. And in terms of the overall stats, we can see here that we've posted over 700 trades. Steve's at 694. How many pips we've had, what the R count is. So this is how much, you know, we risk 1 R per trade. How many multiples of R have we made along the way? These are our win rates. So unfortunately, our default expectation is that we're actually going to lose money. But by having a strong risk reward ratio, the account balance has grown pretty substantially. So from starting from 1,000, we're now at a balance of 3,200. This has all been hypothetical, but now we are taking this live using real funds, and we can actually then do it on the basis of a £2,000 account, risking 1% per trade. And we've got you know, a live record of that now, starting from today, and we'll try and maintain that throughout you know, the time that we continue to record these videos.
Excellent.
Okay, let's move on.
Joe, I'm already up. I'm already up £4. I'm thinking about banking it.
No, got to hold firm, Steve. There's no management of these trade ideas. We let them run till 9.
9 o'clock tonight.
Okay, so data-wise today, we have the US ADP jobs report, which is due out at 1:15. That will be the precursor for the non-farm payroll number that's due out tomorrow, and will have a significant impact on the sentiment towards Federal Reserve policies. We've also got the weekly jobless claims that will be due out 15 minutes after that event at 1:30. And then at 4 o'clock UK time, we have the US EIA oil inventory numbers. And then all eyes on tomorrow, the US employment report, the non-farm payroll number, as well as the Canadian employment report, which will be due out at the same time. Okay, that is it from us, Steve, I believe. And thanks for everybody for getting involved today and watching the video. We hope it's been useful. And yeah, we'll see you all tomorrow, hopefully.
Yeah, cheers.
Thanks, everyone.
Bye.